The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome. Well, I got to turn that up so I can actually hear it. Now, welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable host. From Alaska to Nebraska, from Japan to Milan, and Tanzania to South Korea. We love to come to you at this time. If he can get his mouse over there. No? Oh, there we go. Thought they'd missed it. Okay, so what do we have today? Of course, markets are lower. Shorts are consumed with the banks failing and piling on there. The 4-day week starts next week, but it's also fun buying week. And next week is going into 4th of July is some of the lightest volume, very light volume. We already have that today. And as we said the last few days, the market's going to break one way or the other. The risk reward still long or short is pretty good. You just need to make sure and have a stop on the other side of it. I see a ton of stocks, not the indexes. I will leave that because I'm playing stocks. But I see a ton of stocks down on incredibly light volume today, trying to push through the lows. Now, maybe they hang up there, maybe volume comes in, but it's pretty quiet for a market with everybody saying the end is nigh. I've been out buying some more positions today, added a couple of two to the roster. And yeah, they're all doing kind of well. I got 4 stocks in the daily newsletter, and they're starting. They're encouraging. We're all testing all these previous lows and pushing lighter and lighter volume. Each time they push down, the volume comes lighter again. Again, that is not the index, but of course, the old story. The old story is it's a market of stocks, not really a stock market, depending on how you play it. If you're going after the indexes alone, as I said, I'm kind of thinking we're kind of range bound. I'm looking for opportunities in very specific sectors. So we'll continue to look at that. Is there anything else going on? It's not. We're going into fund buying next week. Volume is incredibly light on the push down. We've had some stocks kind of go lower. But the question is whether or not they're going to stay lower into next week. That light volume is always problematic for heavy short sellers into a thin market. Of course, the other chestnut everybody dusts off is do not be short a quiet market. And by quiet, they pretty much mean one going sideways, and the other codicil I would add is incredibly light volume. 3,026 on the S&P cash. Now the question is, are we going to get anywhere close to 14, 15 billion shares on the CBOE consolidated tape? Well, at 2 o'clock, we're only halfway there. So that kind of tells you about how juiced this market is going to be. We've got a lot of people short both the equity or the all the equities in the S&P 500 or have fairly high put call ratios the last day, and of course the ones in the VIX, the out of the monies are very heavy. So generally, you look after everybody decides to buy all the Hail Mary puts in the VIX. You generally see the market either go flat or move higher. And, of course, into a very light volume market next week, you could see a lot of volatility, both up and down. But my guess is if we were going to see the end of the world scenario play out today, we would have easily blown through and probably been below 29.50. That you can't get a lot of momentum although we've been down here several times, the volume is not increasing. Doesn't mean that we won't find anybody not buying at higher prices and you can melt lower. But for the most part, all the signals say that if we do go lower, it will be marginal. But we don't have a lot of signals saying that if we go higher, it's going to be anything more than a trading range either. We've talked about a market that probably really needed to consolidate a little bit, and maybe all the negative news, those negative waves, people keep pushing out there. I'm hoping for the best, but I plan for the worst, and that's why there's a stop. Stops are there, just like every ship had a chart. Every stock has a chart. Every sunken ship had a chart. Stops are there to keep you from going down with the ship. No one wants to do that. You want to be the rat that gets off before that ship sinks. But I do digress. Anyway, volume 7.8 billion shares on the consolidated tape. That suggests that we are going to come in to previous lows on significantly light volume in most of the equities. The ETFs may be different. Maybe we'll get a chance to look at those during the day. But light volume, and of course, can you see markets continue to drift lighter volume down? You can. I remember it had to be August of 2004 or 5, just sitting there and watching an entire summer go by, one tick at a time. And it was just like every stock went up like an hour, went 10 cents up with no volume. And it lasted all the way to, I think, the first week of September. And then everything finally fell apart. But it was a tough month to watch it go up on light volume. And a lot of people go, well, you got to pull the trigger, you got to pull the trigger. Well, there was a very good, I think it was after Labor Day, there was a very good signal, and then everything fell apart. And all that 1 month, I think it gave it up in 2 or 3 days. I'm going to have to find that someday. I just remember it fairly vividly. Okay, we got lots of stuff going on. Oh, we've got a little bit of that. But yeah, sit rep. Shorts are piling in on banks. 4-day week next week with very light volume, historically light volume. And the reward is pretty good, whether you want to be short or long. Probably not going to move that fast, so you get stopped out before you get clubbed like the proverbial baby seal. On this day in 1956, the U.S. Congress approves the Federal Highway Act, which allocates more than $30 billion for constructions of some 41,000 miles of interstate highways. It will be the largest public construction project in U.S. history to that date. Of course, this came along from President Eisenhower hanging out in the First World War and the Second, but mostly the Second, where he was really amazed by the speed at which he could go down the autobahns of Germany on his march, of course, to Berlin. But once they got to the German borders, where all these wonderful highways are, the war effort started to race forward. Of course, they had to get all that stuff, gas and all the other stuff along. But that was the beginning of the end by the roads. And, of course, that's what he wanted here. Not the beginning of the end, but the ability to move stuff around quickly and be able to route around it. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're going to get going. And the first question is LABU. So let's pop this up real quick. And what do we have? A little bit of this off the top. You had a high volume test of 65.99 a few days ago. We're just getting a little bit of a consolidation. That broke above the long-term breakout back to December 26. Of course, this is leveraged, so it'll have a lot more decay. But overall, the biotechs look fairly good. You had a high volume high. You had good energy off the low. Could have had a little bit better, but my guess is we're just going to consolidate a little bit out here before you got a valid high in the LABU. That's going to at least get retested at 65.99 with volume. And when we talk about volume, it's twice the volume you had back at December 26th. So sign of strength, nice gap higher. You pull back a little bit, but no. I think it's going to be okay. Just going to have to give it a little time. But it depends on what time frame you're looking at. If it's a daily time frame, if you're looking long term, still looks fairly good. Okay, just what else do we have out here? Let me move some stuff around. Okay. Just taking a look at everything else we've got here going on. Okay, next question is Apple, AAPL. So we'll get to that. Okay. And you got a little bit of downside, but the volume here is pretty light so far. You were up on the 23rd with some decent volume, 53 million shares. You're down today with about 29 million shares. So let's say you come in at about 40 million shares. That goes back into this up day of about 33 million shares. Just some consolidation around the probably 355 to 365 area. I don't see anything that really changed. As you've gone down each day, you've gotten kind of lighter volume. But nobody beating a path to the exit yet with high volume off the top. Okay, got a couple of those. Question about whether it goes to 50 or 200 day on AMD. I don't pay attention to that. I was telling Larry a joke yesterday. Was it yesterday or today? It may have been today. I do digress. But it was about the statistician who slept with his head in the freezer and his feet in the oven. Overall, he felt fine. But that's the problem with moving average. I don't spend a lot of time on them other than extremely short terms. And, you've had a little bit of downside here. You're back into the up day of 62 million shares. 27 million shares so far. Like I said, there's a lot of these that are just coming back in here. You had a little more volume yesterday and you rejected it. You're getting back into it today on lighter volume. Don't see a signal to pull the trigger. You had a nice reversal, which didn't end up being anything, but now you're back into the days of May 1st and May 4th. And of course, April 13th. But, probably just, like I said, volume's kind of decreasing. A lot of people kind of taking their pennies out of the market at these highs. But I don't see a lot happening here just yet. Maybe we get some more developments in the market. But, what can you say? Okay. Question about the weekend. AMD. Basically, you're selling off on very light volume into a Friday. That means that generally, if you can't get people to throw up their shares on Friday, it's very tough to do it on Monday. Sometimes you see the big guys kind of chum the waters, try to run everybody out if they're going to move the stocks up on Monday. But I don't know. I have a feeling that regardless of the news, you're probably going to see a lot of those folks out the door on Tuesday already for the Hamptons. Why they tell everybody to do one thing, they will be out partying at their houses on the Hamptons probably by Tuesday night, maybe Wednesday at the latest. So it's going to be a really quiet Wednesday and Thursday. My guess is they push it up. Fund buying is going to be in there. A lot of those orders are going to be in there. So it's probably going to be either a flat market next week or we're going to see probably some individual squeezes in certain stocks. Okay. GLD. A very hard one to say, other than it's hanging up at its highs. So not a whole lot. You don't want to see it close below the 9-day moving average. That's more of a ballistic issue than I don't pay any attention to 50 or 200-day moving averages. If you do a test, you find out it's like worth 0.5%. And I'm looking for things are 60, 65% accurate, not 0.5% accurate like a 50 or a 200-day moving average. You can see little blips in the data if you go back and do some big studies. But, I mean, they are blips at 50 and 200, which sounds to me more like a self-fulfilling prophecy than actually something that you can make a lot of money off of. I know a lot of people pay attention to it. You just don't see the actual results in any studies over time, at least that I put together. Maybe somebody's got some kind of double flying Lindy way of looking at them, but they haven't told me yet. Okay, what else do we have? SLV, which is silver. SLV. You're just kind of hanging around here at this highs. Now, the thing that happens, we talk about it with Tim Ward from time to time, because he kind of brought it up in my early days of trading. That is, if these things are just going sideways at the highs, if you don't see some really clear signs of distribution, if they just kind of hang out here, generally they're going to pop above it. And at that point, you're either going to get volume or not. And you could kind of say that you had that already, but it's still hanging out here to the right-hand side. So generally, you're going to go get yet another pop That pop is either going to be on a lot of volume and give it all up that day, or you're going to have a lot of volume and a sign of strength. So, like I said, kind of a coin flip for a lot of stuff out here. I believe in Mr. Miyagi and the Karate Kid. Best way to avoid fight, not be there. And I generally wait for these things to move before I actually act. Okay. Double Indy, back to school. Yes, that's it. Okay, what else do we have going on here? Got some more emails in here. Okay. Okay. Got lots of emails. We'll get to them when we're back.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off 65 points on the S&P cash. Check this volume to see whether it's coming in. Still very slow, a little less than 8.2 billion shares. Again, 15 billion, 14 billion would probably be a pretty good day. So with an hour and a half left to go, maybe we do 11 billion shares here today. So it's going to be a quiet Friday, down significantly on the indexes. A lot of the stocks, though, that I'm looking at are fairly quiet. Now let's take a quick look at the volume in the QQQs, see if we see anything in there. You are coming back to this gap up back on the 16th that had 48, let's call it 49 million shares. You're back into it with about 36 million shares now. You could get close. Depends on how much action we have at the end of the day. But you're basically just back in retesting this gap up on the 16th. And I don't think you're going to have more than 48. Maybe you tie if everything sells off into the close. But so far, not as big a deal as one would think. But again, Monday could change. We could go into selling off on light volume all the way into Thursday, which actually would be the bullish thing for after the 4th of July. But I don't know. Pretty quiet, at least on the individual equities. Most of the volume coming in today is on the indexes, which tells me a lot of people are piling in on the short side of the market, and probably on the short side of the indexes, kind of trying to put a Powell on everything. Okay. Question about Microsoft. Anything else going on here? It's still on a fairly decent trend line, just at it. No volume comparatively. You had 32 million shares. You had 44 million shares back on the 19th, kind of in this area. Back into it with about 26 million shares so far today. Let's take a look at Amazon, see if we've got any volume in those. This one's still way above a trend line, at least the 9-day. Down on about 3.6 million shares. You were up on 4.5 million shares on the 24th. Yeah, you could get to that. You might get 4.5 million shares before the end of the day. Is it going to be a big blow-off reversal? No. Your last really big volume day was the 19th when it was up on 5.7. And a spike even back on the 10th was about 5 million shares. You got 5 million shares everywhere. So probably a little bit indeterminate. Okay, what else do we have? Take a quick look at the SMHs. Does that get everything? Okay. SMHs. SMH. Take a quick look. Now, this one's a little bit more problematic, and maybe why we're starting to see some stuff, but no volume. This is close to a double repo pattern, not quite. You went kind of sideways a little bit too far. What you should have seen in the break of the 9-day moving average is a lot of volume. You had some decent volume, and generally you just give it up right then. Today we're just kind of sliding off to the side. 2.5 million shares so far. You would have liked to seen something like 5 million shares to actually confirm it. You're actually now coming back into the 4.2 million share day higher on the 15th. So, that's going to act as at least a kind of a moderator for finding lower prices into that. Let's see, take a quick look at AMAT. Kind of the same thing, but it's, again, you're not getting a lot of volume here. Gap up on AMAT on the 16th was just under 10 million shares. Back into it right now with 3 million shares. So that a lot more going on here. Even yesterday, 6.3 million shares. You're back into it. You could maybe get another 50, 75 cents lower, maybe on Monday. I don't know if you're going to get it, though. This is very light volume on AMAT. Let's take a quick look at Qualcomm. See if they're doing anything today on the heels of Apple being a little weaker. Just kind of a tired market is what it really looks like to me. Just going sideways in Qualcomm since the gap higher on the 16th. That was 12.6 million shares. Today you got 4 million shares. So again, if you were looking for a great sign of strength with huge volume off the top, you didn't get it. If you were looking for a move higher on volume to break out of this trading range, you didn't get it. So I don't know if there's going to be a lot of happy people come at the close. They may be momentarily happy, but tough to see on that. Baker Hughes numbers are kind of out. They are out. Almost nothing is going on in the energy patch here in the United States, which is kind of what we're looking at. Don't see anything here in Qualcomm. SWKS. Now, to me, this would have been a lot more bearish for Apple and the smartphone makers if you would have seen a real drop in Skyworks Solutions today, which is a good proxy for Apple and the rest. You're down, but on fairly light volume. Your last major low came on 2.4 million shares on June 15th. You got about 846,000 shares. Now, maybe that volume comes in on Monday, but today, I don't see a lot of evidence. You had one kind of a reversal day out here on the 19th with 3.7 million shares, but then nothing, no follow through. So kind of a one-day, one-shot thing, just kind of going sideways out here. So don't see a lot. Another question about actually shorting Apple. We looked at it. I don't see anything in here. AAPPL, if he could type correctly. I don't see anything. I know we've been getting phone calls and texts and questions since what, about 285, maybe 295, can't remember exactly, but it was under $300 on shorting this, and then at 325, and then at 350, and then that. I continue to think that Skyworks Solutions, that Qualcomm, that a lot of these other stocks would be much bigger returns than Apple would be on a turn. And I've got to sneeze. And hopefully that's better. But you know how this air conditioning is these days. It's a pleasant 150 degrees outside in Florida today, but a balmy 72 in the White House. It's my house. It's the White House. We'll be back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And, got to turn that back up so I can hear myself. Looking at ZAR, don't know much about this ETF. I've got some other ones that I look at. It's basically its support, but we'll see. Maybe on Monday I'll have a chance to look at it. It's its support, but did come back on a lighter volume, which does look kind of interesting, and not getting a lot of action today. But I'd want to look at the other ETFs at the same time. ABT, which is Abbott Labs, actually looked pretty good. There's a double gap that we talked about from the 14th of April, up on about 10 million shares. You got back into it with 5, maybe 6 yesterday. Got a little reversal. Still hanging out here, about 3.5 million shares so far today, but not back into the previous low. ALNY, Alnylam Pharmaceuticals. This one's up on fairly light volume. One of these that did break higher but has not had volume yet. You got about one more day before volume needs to come in, or this thing's probably going to come back in and go to about 143. But we could see that Monday. You'd probably want to wait just a little since it is hanging up on a very bad day. BTE, which is Baytex Energy Corporation. This is a penny stock. Nice gap higher and move higher. Starting back on the 2nd of June, had a sign of strength with 11 million shares. Went to 75 cents. It's back here at the very top of that first sign of strength, and kind of going sideways. Don't know a lot about them. Wanted to check in with CAR. We talked about this one. Possibly being the heir apparent when Hertz goes belly up. You had a 9 million share low back on June 11th at 21.60. You're down to $20.10 today on about a third of that volume. We'll say you get half of it. Still fairly light volume. Maybe you get this gap back from, what is this? The 27th of May. You kind of in that right now already, but maybe you get a little bit push. This everybody's a little bit. Okay. Okay. Good question in the den, which is on Micron. They report after the bell. Do I see anything else going on that? Just kind of going sideways. I can tell you that Micron continues to supply all the memory they can to both AMD and NVIDIA for these video cards and a big rollout. So even if they kind of went down a little bit on after the bell on Monday on reporting, they make more money on that video RAM for video cards than anything else. So I would think that would be something fairly interesting. My guess is it probably is $50 come Tuesday morning. I don't see a lot of upside or downside in what Micron says. Long term, though, all new rollouts for video cards from both AMD and NVIDIA for the fall. And we're going to talk to Tom O'Brien on why I suspect that at least for NVIDIA, it's going to be pretty good. But I think that makes it good for everybody. But and just kind of going sideways here, lighter volume so far today. It's just a lot of people are nervous about everything. So what else can you say? But I'm thinking $50. If at least the prices that I'm seeing and reported in Taiwan for video RAM, it seems to be good, and it seems to be hard to get computer parts. So people are still buying. I mean, they're still making them, and there is kind of a shortage. I wanted to buy a new actual enclosure for my PC, and it was actually hard to get. People are spending a lot of money, and maybe because they're working at home, don't know, but they spent a lot of money. There isn't a lot of inventory. Sometimes that can be a issue with them just not making as much because they thought things wouldn't be as good. You really don't know that until they report. But, man, people have been buying a lot of computer stuff. Very tough to get a lot of stuff at Newegg. That red line on your charts. How you doing today, Garo?
How are you, sir?
Good.
Good. I want to know what's the moving average on that red line that you have on the chart, please?
Normally, I use a 9-day moving average, but really most of the time I use a displaced moving average, a 3-day, and I don't go much farther than that. I just look at it as kind of the ballistic move of the stock, not so much that it really means anything other than, if you got something. I use it more like a parabolic SAR than anything else, just to see if it's way on one side or on the other. And, of course, when it comes down underneath it, it's not so much that it's underneath it, but did you get a sign of strength or weakness when it either broke above it or below it? So, but that's either the 3-day moving average, the 3-day displaced moving average, or sometimes I use the 9-day. It's the 9-day moving average is just a little smoother. And I'm showing both of them. So that's it. And again, it's just kind of it's more like a ballistic thing for me. I don't put a lot in the long-term moving averages like a 50 or 200. I do like the very short ones, and that's it. It's like if you shot a bullet, you should be able to pretty much know where it landed. If you know how much powder was in it, there should be some ballistics to it. And that's kind of all I look at it is when that move came, did it have pretty much the ballistics that it should have either on the way down or the way up?
Yes, sir. You don't have no dots on the parabolic SAR on the chart. At this time, are you using it?
No, I don't use parabolic SAR.
I see. I use that all the time, and it does miracles to me.
Yeah, I use a different pattern for finding tops just because there's so much. I find them much better, and that is, Yep, gone. So anyway, I don't use parabolic SAR. I use the Joe DiNapoli double repo pattern, which is 10 or 15 days above 3x3 displaced moving average, a couple days below it, a couple days above it. And the next move below it should be a sign of weakness or strength, depending on whether you're coming up or down. I like it because parabolic SAR has got me in trouble before. So I tend to be much more a fan of Joe DiNapoli's double repo pattern, which we've talked about at length. Okay, question about FireEye. We talked about it this week a few times. my thoughts. Take a look at here. My thoughts earlier in the week was what I want to see before I get in this is some M&A action on Monday. They're probably a buyout candidate, but man, you got to wait until you start seeing that M&A on Monday mornings. We'll be back in a minute.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, yes, in about 35 minutes, we'll be on with Tom O'Brien, talking technology, and that'll be it for a while, because next Friday we're gone, and then the next Friday I'm on vacation, so it'll be a couple of weeks before we get back to a Tech Insider segment, but we shall persevere and overcome. We all have our burdens to bear, don't we? So anyway, okay, I think we talked a lot about what we're doing here. Okay. Anything else that I'm looking at here real quick? Check out the volume one last time, down 66, so about the same as last time we looked. Let's take a look at the volume. Man, it is pretty much stopped. If this is right, let me update it just to make sure that it is. Yeah, 8.7 billion shares. Again, if you wanted to see some kind of sign of strength, doesn't mean that it has to stop right here. It could dribble off for a while, but we're not breaking these previous lows with extended volume so far today. 8.7 billion shares. And again, we got, an hour and 5 minutes. You probably have to have about close to 6 billion shares come back in. That's 3/4 the volume we did all day to get a sign of weakness. Now, maybe it comes later. Sometimes they kind of try to sneak up on you. Sneaky little devils. But so far, all the stocks are kind of confirming the same kind of thing I see in there, which is that we have a very low volume. Now, you're going into 4 days, fun buying. Maybe it just goes sideways on light volume. Maybe it goes up on light volume, or maybe it goes down on light volume. But all of those are going to be clues. What happens when we get back from the 4th of July? Sell when you can, not when you have to. We will see you here Monday. Same bat channel, same bat time.